Be Wealthy and Smart, episode 1439.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, I'm going to give you a little economic update because we have some little tidbits of news happening in the economy that are very interesting. And we have the S&P 500 rising to a record close for 3 weeks in a row. So as I said in my last podcast, the jobs data from November came in slightly better than expected, which means it's not too hot, not too cold, but just right for the Federal Reserve to reduce interest rates by 0.25% on December 18th. Traders believe there's about an 88% chance that will happen. Unemployment sits at about 4.2%. When you look at the data from Black Friday shopping, consumers significantly shifted toward online shopping this Black Friday season, according to Bank of America. They said online retail spending, card not present, in the week ending November 30th was up 7.9% relative to the week ending the day after Black Friday in 2023. But brick and mortar retail was down 0.3%, even though there were gains in nearly every spending category, according to economist Aditya Bahav. The caveat, they added, was that Thanksgiving fell 5 days later in 2024 versus 2023, meaning the shopping strength could partially be due to consumers spending more over a shorter holiday shopping season. Bank of America also reports that according to a consumer survey, more consumers plan to buy a car in the next 12 months. They said new vehicle next 12-month spending expectations maintained its heightened level from last month, with 43% of respondents expecting to buy versus 41% last year. That was according to Bank of America analyst Robert Ohms. The bank surveys around 1,000 U.S. respondents on a monthly basis regarding their spending expectations. There were also plans to buy new appliances. That ticked up slightly, and plans to buy a new home decreased to 19% in December from 21% last month. And HSBC raised their target for the S&P 500 and said it expects the broad market index to hit 6,700 by the end of next year, which implies more than 10% upside from Thursday's close. The index is already up more than 27% this year. Analyst Nicole Inouye told clients in a Friday note, overall we expect earnings to grow by 9%, incorporating a slower but still resilient U.S. economy and some margin expansion. She also said she expects the U.S. economy to slow over the course of the next year but remain resilient as inflation eases, which would enable the Fed to cut interest rates by another 125 basis points or 1.25% total cut in interest rates, she forecast. All right, well, I'm predicting 1.25% in total cuts in interest rates from now, including December, so 0.25% in December and 1 full percentage point next year. She's predicting 1.25% cuts in 2025. Very interesting. And UBS is still bullish on stocks in 2025 and said, heading into 2025, we think a constructive stance is warranted on global equities and on U.S. stocks in particular. We wrote that historically U.S. equities tend to rally into presidential elections and after, with the average gain in the 150 trading days following an election averaging near 5% in data going back to 1928 for the S&P 500. UBS added that the most attractive U.S. sectors are technology, utilities, and financials. During Friday's trading session, 23 stocks in the S&P 500 reached new 52-week highs, including Meta, formerly Facebook, Amazon, Apple, Palantir, Tesla, and Costco. And finally, Citi commented on Bitcoin. Alex Saunders wrote, Bitcoin may have passed the $100,000 threshold earlier this week, but even the digital asset cannot withstand a waning economy. We do not think Bitcoin or other digital assets will be immune from a weakening in the economy or sentiment, either from tariff uncertainty or U.S. labor markets. Saunders added that Bitcoin could see its dominance fall going forward. Regulatory clarity may favor non-Bitcoin tokens given existing ETF vehicles and Bitcoin's classification as a commodity, he wrote. I'm anticipating that alt season will pick up, that Bitcoin's dominance will drop, and that means the altcoins, anything other than Bitcoin that is, should rise in prominence. And with Brad Garlinghouse appearing on 60 Minutes on Sunday night, we'll see how XRP reacts to that, whether we see a traditional sell-off on Monday, or if the upward trend continues into the week. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.